All right, welcome to a special segment of Justin and Donald Save America. A little standalone thing, only maybe 15 minutes, although Justin's a talker, so I guess we'll see. In this little segment, we're going to be talking about the effect of Trump's tax cuts. So Justin is a weirdo that likes to play with spreadsheets and stuff. So he started putting this tax data into a spreadsheet, and we're going to talk about the results that he found. This is what Justin does on Thanksgiving morning instead of hanging out with family and friends. Before we talk about that, I have to say the thing that I say at the beginning of all of these videos, which is if you want to help us get this message out there, the message of, all the things that we talk about, you can help us free of charge. Hit the like button, leave a comment, share this content, hit subscribe, all of these things that cost you absolutely zero, but help us break through these big tech algorithms that prevents content like this from reaching more eyes. Justin, your response?
No.
The other thing that
I'm not going to give you the pleasure of silencing me again.
You don't know what I was going to do.
Yeah, I know what you're going
to do. Okay, so take us through this, Justin. What's the real story behind this?
Look, I think that generally speaking, people on the right believe that the Trump tax cuts worked. All right, so that there's no mystery there about that. I think most people believe it helped with economic growth and it helped improve the economy and on and on and on. But one of the things that I've always been very interested in is specifically how the tax cuts impacted not just the economy on a macro level, but what was the actual impact on people's tax bills themselves? Okay. Did people pay more in taxes? Did they pay less in taxes? Who paid more? Who paid less? What's the differences between the various groups of people based on income? The reason why I care about that is because one of the biggest arguments against the tax cuts from people on the left, and they still use this talking point to this day. Every time Joe Biden talks about the tax cuts, the 2017 Republican tax cuts, he talks about how they only benefited the rich.
Yeah, and we just got crumbs down here on the lower part of
Exactly. Right. And that was the standard talking point. So even when you could show on a macro level that we had more economic growth and all this stuff, there wasn't the data available to actually show, well, how much did I specifically as an individual save or lose because of the tax cuts, right? And it just didn't exist. And because of the way the IRS produces data, it takes years for them to actually put out specific data for specific tax years. So when you want to compare two tax years, 2017 to 2018, the year before the Tax Cuts and Jobs Act went into effect and the first year of it, you had to wait for that to come out. So the most recent data we have from the IRS now is the 2018 taxes. So the 2019 filing year, but 2018 tax. So now we finally have IRS data for the detailed IRS data for the first year that the Republican Trump tax cuts went into effect. So what I did is I took a look at the that detailed information and I compared it to 2017 tax data so that we could have a before and after approach to the tax cuts to see how it impacted people in a real way. And what I found was it was almost too good to be true. It almost seems too good to be true. If I was Donald Trump or if I was a Republican congressman or something, I would write the script the way that the results actually came out. They were that good for people who believe that the tax cuts worked, not just on a macro level, making the economy better in general, but saved in middle class and lower income people, working people money, and that they did not benefit disproportionately wealthier people. And that's exactly what the data shows. So I want to pull up the data and I want to just talk through some of this stuff very briefly to give you some examples of it. So we're going to try, I don't know what you did here. What, did I lose it?
There.
Oh no, there it's gone.
I saw it for a second. There it is.
Is it still there? Okay. So this is the tax data that I found. All right. So first here, all the way on the left-hand side, this is just the number of returns in 2017, various things, the total income taxes paid by these various income brackets. That's what's all the way on the left here is income based on adjusted gross income. So this is after deductions and things like that have been taken into account. All right. And we don't need to go into all of the details of this stuff, but the really key thing, the thing that we need to look at is right here on the right that's highlighted in yellow. All right. What this shows is the percent change in the average taxes paid by each filer from 2017 to 2018. Okay. So what it shows is how much did each income bracket, how much did their actual taxes that they paid, how much did that go up or go down? All right. So this is after taking deductions, after taking credits, all that stuff into account. This is what you actually paid, right? And what we see here is that every single income bracket, every single one, had a tax cut, right? Everybody paid less than what they had paid in previous years. Now, when you're looking at the top of this and you see, well, $1, people who had an adjusted gross income of $1 to $5,000, and you see a 40% tax cut, or you see an 87% tax cut for $5,000 to $10,000 or something, you gotta take that in context, right? These people pay basically nothing in taxes as it is. So when you go from paying $5 in taxes to $2 in taxes, that's a huge tax cut percentage wise, but it doesn't really mean much of anything, right? So you got to go a little bit further down to see real numbers. But when you actually start looking at people who pay a fair amount of money in taxes, hundreds to thousands of dollars, right? You see 30,000 to 40,000, 40 to 50, 50 to 75. These people, what you're seeing is a 20% tax cut, 18%, 18%, 17%. So fairly large tax cuts for the people who are in this group. So these aren't necessarily individuals. This data is based on filings. So this could be a married couple filing together, or it could be an individual filing. But you're seeing big tax cuts for these people. People saving hundreds of dollars, in some cases thousands of dollars, depending on their income level. But as you go further down the list, what do you see? As you go further down, you get the income gets higher. Don't pay attention to this adjusted gross income thing down here. But as you go further down, you see that the tax cut, generally speaking, has a tendency to go down, right? The trend is downward as people make more money. Well, what that shows is that higher income people actually received a disproportionately lower tax cut compared to people who were in the middle class and upper middle class. So people who earned $1 million to $1.5 million had on average, roughly, we're talking about for this whole bracket, so it's averages we're dealing with, a 6% roughly tax cut, okay? But people who were 75 to 100,000, which for a married couple is a very modest sort of middle class, middle income, lifestyle that those people would be living, they had a 15%. So that's more than double what people who were earning over $1 million had. And some people, like I said, you got 18% here. You've got 11% for $100,000 to $200,000. So what the data shows is that the tax cuts actually, generally speaking, disproportionately benefited lower income and middle income people. Now, if you're just talking about real dollars saved, just total dollars saved, then yeah, obviously wealthier people benefited the most, but that's because they pay way more in taxes.
And that's what the left will always respond with.
And
right?
It's a ridiculous way of doing things, because you could give somebody who's, making $25,000 to $30,000, you could give them an 80% tax cut or a 90% tax. You could make it so that they pay almost nothing in taxes. But technically, if you just gave a tiny little fraction of a percentage off for someone who makes $10 million, they're going to get a bigger tax cut if you're doing it just based in real numbers, right?
You get a 99% tax decrease, tax bill decrease, and the richest people among us get a 0.5% tax decrease. In terms of real dollars, that 0.5, they're probably still saving more money. So we're against it. Exactly. We're against it.
So it's a ludicrous way of doing things, and they know it. They know that it's dishonest to do it that way. The fairest way to do it is to do it based on percentage. And that's when you look at the actual percentage of the average, the amount of money, or the total amount of, we're just looking at totals here for these different brackets. But when you're looking at these different brackets and you see how much money these people received in tax cuts, real tax cuts, not theoretically, but what people actually paid to the IRS, you see that the middle class and the working classes, they were the people who benefited the most from these tax cuts. So that was the first thing that I think is really important.
So wait. A couple
Sure.
of things, because you would almost think if there wasn't any type of class warfare, sentiment in this country at all, that the fairest way, like, would just be everyone gets a 10% cut, no matter how much money you make, 10%. And if that were the case, then that little highlighted column right there, every single one of those numbers would be 10%, right? So, so that's one thing. But so I'm looking at this, and if this is the end result, does that mean that the tax rate under these tax cuts and all of that got more progressive then?
Right. So what's really interesting about that is if you look at the total, and we would have to go further over to answer that question, but this column here to the right that's in green here, this is the total percentage of all the income tax revenue, right? Of all the income tax revenue in 2018 that was collected for personal income taxes. This number tells you what percentage the corresponding income bracket contributed to that total. So for example, this one right here, $30,000 to $40,000, they contributed 1.4% of all the income taxes. So all the money paid by everybody in that AGI group paid for 1.4% of the total amount, right? So if we scroll down, you can see the higher the income goes, the bigger the percentages that people are paying of the total pie, because that's the way our system works. It's an extremely progressive tax system. People tend to talk about it in the United States like it isn't that progressive. It's actually very, very progressive. One of the most progressive systems in the world, actually. There are many European countries that don't have a progressive system quite as progressive as this. Now, what you see here in this column that has the colors in it is that this is for 2018. The colors, the column to the left of it that doesn't have any color, that's 2017. And the colors, green means that this group, this bracket, actually contributed less in terms to the total pie. They contributed less than what they had in the previous year, in 2017. So if you see a green number, that means that income group ended up contributing less than they had previously contributed. So for 50,000 to 75,000, this bracket here, in 2017, it was 6.5% of the total pie. In 2018, it was 5.8%. So their total tax burden relative to the whole actually went down. All right. The red numbers mean it went up. All right. So again, don't pay attention to this no adjusted gross income thing. What do you notice here? What you see is that the higher income brackets all ended up paying a bigger slice of paying for a bigger slice of the total personal income tax revenue pie than the lower income people. So the tax system actually got slightly more, not huge, but slightly more progressive under these tax cuts.
It's like they sat down and came up with the most politically palatable way to cut taxes, and the end results show that. Like if you were to that gold column, that yellow column right there, if you were to chart that, it would be this little curve that goes down. The more like in tax savings, the more you get to the wealthy side of things. And then the green and red column you got there, it's like a stark line. It's like anyone that's making under $200,000 is footing a smaller piece of the pie in terms of tax revenue. It's like this was carefully planned out, it seems like. But then, of course, the left's response is, oh, we just got crumbs. It's the rich that got all the savings.
Right. That's the narrative, but the narrative shows very clearly that the people who made out the best from this is actually lower in middle income people. They're the ones that made out the best. There's absolutely no doubt about this at all. Everybody made out well because everybody got a tax break. But if we're talking about how groups compared to each other, what you see is that middle income and lower income people made out better than every other, made out better than the wealthier people. There's one more thing that I wanted to talk about related to this data that I think is important, that tells a story sort of on a macro level. And it's this column right immediately to the right of the gold column here. It's column K, and it says percent change in the number of filers 2017 to 2018. Now, what this column is showing is the change in the total number of people who fell into or total number of filers who fell into one of these income categories all the way on the left. So, for instance, this first row here, $1 under $5,000, that fell by 5.79%. What that means is that in 2018, there was a 5% reduction compared to the previous year of the number of people who fell into the $1 to $5,000 category when they were filing their taxes, okay, just in 1 year. The next one says negative 7%. That's the same thing, 7% fewer people, then negative 1%, negative 4%, negative 3%. All of these negative numbers are lower income brackets. Now, what does that mean? What that means is that these are people who, even though the total number of filers went up in 2018 compared to 2017, the total number of people filing in these lower income brackets actually went down. That indicates that people were leaving those brackets and going where? They were going to higher income brackets. That's why when you scroll down and you look at the higher income numbers, you see all of the higher income numbers went up. Every single one. Every single category. Again, don't pay attention to the last one. Every single category went up. What does that mean? It means people got richer. Everybody got richer. That's what that indicates, because there are more people falling into the higher income brackets. And when you look at this group, 100,000 to 200,000, and it's almost 6% increase in filers. That means that there were 6% more people who fell into that 100,000 to 200,000 category than there had been in the previous year. And because the next bracket went up even more than that, it's pretty reasonable to assume that 6% growth came from people in the brackets beneath it. It's not likely that it was people who were making more money that fell into a lesser income bracket, because
you would see a negative,
that went up too.
You would see a negative number ahead of it. Yeah.
Right. And you're not seeing negative numbers that are higher than it. So what this shows is that people were getting increasingly richer during this period of time. And it happened again within 1 year. Now, when you're looking at these percentages, it's kind of hard to say, well, what exactly does this mean? But when you actually start looking at raw numbers for some of these things, what you find is that the number of people who left the really low income numbers, these numbers here that I was talking about, 5,000 to 10,000, 10,000 to 15, that group, it was about 2 million people, if I remember right, 2 million people. So 2 million people left that bracket, but millions more people were added down to these brackets here. So millions of people got wealthier.
Right.
1 year.
Wow.
Because of the tax cuts. And millions of people had actually left the lower income brackets and moved into higher income brackets. So again, if you were going back to what I said at the very start of all of this, if you were going to write a narrative, if you're the Trump administration in 2017 and you wanted to write out how this is all going to actually play out because you want it to look really good, this is what you would end up with. It would be something very much like this, right? Wow. And so it is really, really striking when you actually take a look at the numbers. I know it's a little nerdy and everything else. I get that. But it's so important for people to understand that these things didn't just kind of work. It didn't just work on a macro level. It worked in real terms, in real people's lives. People got 20% more money, 18% more money in 1 year because of these policies. That is absolutely astounding. And the idea that the rich were the only ones that benefited is not only not true. Everybody benefited. It's a factual statement that the rich benefited less than these people. Now, you could look at other things like corporate tax rates were also cut, business tax cut. There were business taxes that were cut. And so, in other ways, wealthy people benefited from higher stock valuations and all sorts of other things, capital gains and that kind of stuff. So, wealthy people made out too. But again, the idea that people got crumbs who are in the middle or working class is just flat out not true. People got wealthier, and it happened all in 1 year. One
Right.
year.
Yeah,
1
the
year.
people the people that we're talking about how you just got crumbs are the people that think that your entire salary for the year, your income for the year is crumbs compared to them. So
Right.
so instead of, people trying to take screenshots of this video or anything like that, where can they go to find this spreadsheet or any associated information that you're compiling?
Right. So what we'll do is we'll make sure that we have a link in the show notes on the YouTube page for people to access this on this particular episode. We're going to publish it as a research paper with the Heartland Institute, and it'll be on Heartland's website. And we'll provide the link so people can go there and they can access this data, and it'll be in a nicely designed, policy paper that people can share. Donald will design it for us, and it'll be, I think it'll be really great. But, again, next time somebody says to you that, the tax cuts were just for rich people, next time you hear that line, immediately stop them and say, absolutely not. We know for sure, be confident. We know 100% for sure that the lower income people and middle income people were the ones who benefited the most from the 2017 tax cuts.
Right.
They were a massive success.
Yeah. And remember, when you're looking at this, you're watching this video or you're downloading that paper or anything, that Justin gave up his Thanksgiving dinner. He was down in the basement compiling these IRS numbers while everyone upstairs was enjoying, a turkey dinner. So keep that in mind. Give thanks to Justin when you're schooling your friends about the awesomeness of the Trump tax cuts and all of that stuff. So, Justin, is that it? We're done. We're done for this episode. Do you want to?
I think that's good.
Okay. Anything you want to get off your
pretty
chest?
in the weeds. No. I think the people have had enough of my nerdiness.
Fantastic. Yeah. Well, thank you all for tuning into this segment of Justin and Donald Save America. Like I said before at the beginning of this episode, the easiest thing that you can do to help our channel grow and get in front of more people is just hitting the like button, leaving a comment, sharing this content, being a subscriber. All of these things are absolutely costless, but will help us break through those big tech erected algorithms that prevent content like this from seeing more people. Justin, where can people find you?
At Justin T. Haskins on Facebook and Socialist Twitter and Getter and Parler.
Fantastic. All right. Thank you all for tuning in. We'll talk to you next time.